Afternoon, and welcome to this week's edition of Midweek Money Matters, where we're going to be talking about non-retirement investment accounts. Before we get started, I do want to mention that we are recording today's session, so I ask that you remain muted until the end of the session. Once I've stopped the recording, we are welcome to invite anyone who wants to unmute themselves and ask any questions that they may have. So just remain muted until the end, and we'll have plenty of time for questions then. So let's get started talking about non-retirement investment accounts. My name is Katrina Boyer. I'm the Investor Education Coordinator for the Pennsylvania Department of Banking and Securities, and I'm so happy to see you here today. So if you've not participated in our Midweek Money Matters events in the past, I do want to let you know that there are two kind of categories of investment accounts that we kind of recognize. We talk about retirement accounts most often because that's what we think about when we think about investing. It's for retirement planning that includes our pension if you're a Commonwealth employee or you happen to work for an agency or an organization that still offers that. There are also IRA accounts and 401k accounts that are considered retirement accounts. They're specifically for retirement planning. They usually they have an annual limit on your contributions, but the accounts also have tax benefits. However, at 72 years old, you are required to withdraw a minimum distribution by the IRS. And if you try to withdraw the money early, there are penalties for those withdrawals if you can even access them. But today's focus, we're going to be talking about non-retirement accounts that we use for building wealth in general. So maybe that includes our medium and long-term goals like home ownership, education, or as I said, simply building wealth. What's great about those is that there's no required minimum distribution once you turn 72, and you can withdraw that money at any time. However, before you start doing that, I would encourage you to make sure that you understand the tax regulation, because money that's earned through wealth building accounts is taxable. So before you start planning what you're going to withdraw your money for, make sure that you talk to your tax professional. It's very important that you understand that process. But today we're actually just going to be focusing on sort of what a brokerage account is. We'll talk about how we can invest beyond the simple 401k or IRA. I'm going to break down some important considerations, and as usual with these Midweek Money Matters events, I'm going to provide you with some additional resources, because as you know, I can talk all day, every day about investing, but the reality is that 30 minutes isn't enough time. So I like to provide you with some points to ponder and then provide you with the resources so that you can learn more on your own. So let's talk about brokerage accounts. A brokerage account allows you to deposit money that you can use to invest in or buy and sell stock, bonds, mutual funds, exchange traded funds. For those of you who have not participated in these events before, we do have a YouTube channel on our webpage, on our website at dobs.pa.gov. If you click on the YouTube link, you can go and find the different 30-minute sessions on the different types of investing that are available if you're interested. So brokerage accounts are offered by a huge number of firms, from full service brokers that do everything for you, or maybe you're more interested in a Robo Advisor or an online broker. There are fees and requirements for each of those different types of accounts, and I'm going to do my best to break that down for you. There may be minimum balances that are required to open these accounts. Some firms may charge a management fee, and others may charge you a commission for buying and trading. So it's important that we know what we're going to be charged when we start to look at our brokerage accounts. So before we, let's start talking about the type of brokerage account we may consider opening. I'm going to break it down into 3 different types of accounts. Although it's certainly not inclusive, there's probably many others. So the first one that I want to talk about is basically it's your online self-day trading kind of account. It allows you to buy and sell through a broker or a broker dealer, and it's for those individuals who really want to manage their own portfolio. It's important to understand that you have to do your homework. It's not as simple as buying your favorite stock in your favorite company. You want to make sure that you consider the different, consider how long the company is in business. Does it have a record of turning a profit? Maybe we want to look at the different ratios that are available, and you can find all of that information on the company's website, or you can also go to any number of investment websites that can provide you with that information. So these online electronic trading platforms really are designed for those of us who want to do our own independent kind of stuff. A lot of times people think of these accounts as, someone who wants to have fun, and what they like to say, some people like to say, play the stock market. Those of us who are in the industry don't like to call it playing the stock market because it's certainly not a game. We're talking about our money. So we need to make sure that we keep that in mind. So then there's the Robo Advisor, kind of that hands-off investing. When you go with a Robo Advisor, you typically have to have a minimum deposit that's pretty low usually. All you have to do is make sure that you are consistently putting money into those accounts. You answer some questions about what kind of investor you are. Are you willing to take a big risk? Are you a more conservative investor where you don't necessarily want to take a big risk and you're looking for long-term growth as opposed to making money quickly? Again, great resources. Once you've answered those questions, there's a computer that's going to sort of take over and make those investments for you based upon the answers that you provided. The fees for robo-advisors are typically lower than other type of brokerage accounts. So if you're looking at that, that's one thing to consider. When you look at the first brokerage account that we talked about, you're going to pay a fee typically based on transactions. So every time you buy or sell or trade, you're typically going to be looking at a fee. So if we're looking at fees, that's something we want to make sure that we consider. And then there's a managed account. So that's more of a full service kind of account where your broker may even be a traditional investment advisor. They'll get to know you and what your goals are. They're going to help you with more than just your investing goals. They may help you with estate planning. They may help you with, setting up educational accounts, helping you with your insurance, and many other sort of more holistic approach. However, though there are higher fees that are included with that. So it's important that we understand that as well. So we want to make sure that we are aware of the fees that we're going to be charged for each different type of investment brokerage account that we're looking at. So before we open that brokerage account, there's a few things that we want to make sure that we do. Here's a list of 4 items. We're going to break it down individually. We want to make sure that we investigate the firm as well as the professional, if you're going to be working specifically with one individual, you want to make sure that you understand those investments that are being offered. The relationship summary, we're going to talk about that in more detail in just a couple of slides. And then we're also going to provide you with some questions that you may want to ask of your professional. First thing we want to do is make sure that the firm that we're using is properly licensed. For those of you who have been on with me before, you know that I always encourage individuals to check broker check to make sure that they're comfortable with the individual that they are hiring. But I don't know that I've ever really talked about the fact that broker check will also give you a history of the firm. So we can go to brokercheck.finra.org and we can find information about the firm as well as the individual that we may be working with. So when you put that information in, it's going to tell you how much they have on assets. It's going to tell you, what they manage. It'll give you like a sum of all the money that they have that they're managing for other individuals, other investors. And it will also it will tell you if they've had actions taken against them. Just because a firm has had an action taken against them doesn't make them a bad firm. It just means that they've made mistakes and hopefully they have been rectified. But again, make sure that you're comfortable with what information that you find. So another thing that we want to consider is making sure that the brokerage account that we're opening, the firm we're hiring, offers the type of investments that we're looking for. So we want to make sure that if we are looking to do day trading, we want to make sure that we can buy and sell stock through that firm. If we're looking to buy bonds because maybe we're looking for something that's a little less risky or volatile, we want to make sure that the firm that we're working with offers the types of investments that we're looking to invest in. You wouldn't want to go to a car dealership that maybe doesn't specialize in your foreign car. Make sure that you are comfortable with what your firm offers and the types of investments that they offer. So not long ago, a couple of years ago, the client relationship summary or the form CRS was passed. And basically that summary is a document that gives you all the information about the services that your firm offers. It's going to tell you, break it down in super simple terms, the fees and costs that are involved with that firm. Another thing that it's going to offer is information about conflicts of interest. We don't always have investment professionals don't always excuse me. Investment professionals have to tell us if there's a conflict of interest. So let's say they're suggesting that you invest in ABC stock, but there really are two different stocks you could invest in. They may suggest that you invest in one over another because they may get a higher kickback or they may get a payment from the stock, the company that is offering the stock. So they have to tell you about that. If you have, they also have to tell you if they have a fiduciary duty, which means if they have to do what's in your best interest, they have to tell you that. Broker dealers aren't always fiduciaries. Investment professionals that offer services like retirement planning and things of that nature are typically a fiduciary, but the form CRS has to tell you that. And then the form also has to tell you if the professional that you're working with has had a reportable legal or disciplinary action taken against them. Again, we would have seen that in broker check, but it's nice to know that the form CRS has to provide us with that information as well. So that's sort of one of those extra things that we need to be aware of. Now, we would not hire someone, an employee, without interviewing them and asking them questions. We should not hire a professional to handle our finances or our investments without interviewing them. So I'm just going to go over a few of the questions that you see here on the slides. The SEC, the Securities and Exchange Commission, has a publication that is listed here in the link. If you'd like a copy of today's PowerPoint presentation, I can actually send that out to you. I just need you to send me an email that I'll provide you the email address at the end of today's session. But if you want to get the full list of all the suggested questions, I would encourage you to send me that email. So one of the biggest questions we want to ask is, are the investments that I'm investing in registered? Because, and we're going to learn about the securities insurance program in just a couple of slides, but if the investment we've invested in is not registered, we're not going to have our investments covered by that insurance. The other thing we need to be aware of are, what are the fees that are going to be associated with this? Am I going to have to pay an annual fee? Am I going to pay a per transaction fee? Understanding how the professional that you're working with or the firm that you're working with is getting paid is really important. Another question you may want to ask is how long the firm has been in business, or how long the professional has been doing what they're doing. Knowing that they have a long history of customer satisfaction can go a long way in helping with us to feel more comfortable with the firm, the brokerage account that we're opening. Also asking the professional what their experience level is, or how long they've been, what was their training, what exams have they had to pass. And then one question, and I think this is something that I never really thought of, but asking the firm or the professional to tell you about their other clients, because I want to know that the person that I'm working with is used to working with clients that have similar interests that I do, as opposed to hiring someone who only works with very wealthy clients, and then here I come as a middle income client. They may not understand the unique needs that I may have. So understanding what their client base is can go a long way in ensuring that I'm working with someone that is going to understand my perspective and what's important to me. So I mentioned insurance. We may want to find out if our investments are going to be insured. The Securities Investor Protection Corporation, or SIPC, SIPC, may cover deposits in a brokerage account up to $500,000, and that can include up to $250,000 held in that account as cash. But it's important that we understand SIPC does not cover drops in the market value. So our investments aren't going to be insured because from the ebbs and flows of the stock market, but they are going to be insured if the company would go out of business. You are also not covered if your investments are not registered with the Securities and Exchange Commission or the state, in this case, Pennsylvania. So you want to make sure that you understand what's covered by your insurance and what's not. That SIPC insurance, again, it covers if the investment company or the firm would go out of business, your deposits there would be insured. So one of the things that I often hear from consumers is that they're not necessarily comfortable with the personal information that's required from opening an account. And I've heard this from many individuals who are uncomfortable with providing personal information. The reality is that investment companies, much like financial other depository institutions, are required to gather certain personal information about you. So your name, social security number, driver's license, or other type of personally identifying information. But in addition to that, they're going to want to understand your income and your employment information because they need to have an understanding of where you are. They're also going to ask you about your objectives. What are your goals for these investments, and how tolerant are you going to be for risk? Because they don't want to put you into a high risk portfolio if your risk tolerance is very low. So we want to make sure that we are honest about our objectives and how much of a risk we're willing to take with our investments. Now, just recently, in the last, I want to say it's 3 years, another thing that investment companies, brokerage companies, and investment professionals have started to ask is about a trusted contact person. And that really is for your protection. A trusted contact person is someone that the firm could contact should you start to exhibit behaviors that are atypical for you. It's very important when you're working with older adults who may be having some cognitive impairment, or maybe they are being victimized by a criminal who is convincing them to cash in their investments in order to take their wealth. So the trusted contact person is someone that the firm can reach out to should they be concerned about what may be happening with your accounts. Maybe they suddenly see huge withdrawals, or maybe they suddenly see a complete change in your habits. So having that trusted contact person is a great way for a firm to be able to reach out to someone in order to act in your best interest. So you are not required to provide that trusted contact person's information, but we strongly encourage that as a form of protection for your financial well-being. All right, so as we start to wrap up, I do want to provide you with resources. The Department of Banking and Securities, which happens to be my office, has a website, dobs.pa.gov. We have publications that are available. I have publications that are all about the investments that you may be able to invest in. So we have a publication about stocks, bonds, mutual funds. We have a publication that helps you to understand the different types of professionals that are out there, that allow so that you know what they can do for you, what they're required, what their education is, those types of things. There's a lot of really great material there. You can also see our upcoming events on our calendar. And then there's the Financial Industry Regulatory Authority, or FINRA. FINRA is an organization that it's the self-regulating body of investment professionals, but they have a website that's dedicated to investor education. And you can find lots of great materials at finra.org/investors. The other resource that I want to provide this morning or this afternoon is to the Securities and Exchange Commission. They have a website that's specific for investors. It's investor.gov. Again, they offer some fantastic publications that you can learn more about investing in brokerage accounts and other types of investments. The questions that we talked about for interview, questions to ask your professional, as I said, we talked about 5 questions. The publication that investor.gov offers has something like 50 questions that you may want to ask your professional or the firm that you're considering hiring or depositing your investments into. All right, so I do want to tell you about our Consumer Services Office. They are available during regular business hours to answer your questions. They're happy to provide you with appropriate resources, help you to understand what may be happening with your accounts, and they are available during regular business hours on Monday through Friday. And they can be reached at 800 PA Banks. And again, they are a fantastic group of individuals who actually answer the call when you call in. So keep that in mind. If you have any questions, not sure about something that I said, or you want some help with finding information about the firm you're considering hiring, this is a great way to get the information that you need. Next week, we're actually going to be furthering our discussion on investment accounts. This time, we're going to focus on young people, and we'll talk about educational accounts like the PA 529, and we'll talk about custodial accounts because more and more young people are starting to invest at a much earlier age. However, they have to have an adult on the account. So we'll talk about educational and custodial accounts next week. If you go to padobs.eventbrite.com, you can find all of our upcoming webinars for Midweek Money Matters. You can also find previously recorded sessions that we've done on our YouTube channel at dobs.pa.gov, and then just click on the YouTube link. So that concludes our formal presentation. Here is my contact information. If you would like to get a copy of today's PowerPoint presentation or you have other questions, you are welcome to email me. But in the meantime, I'm going to go ahead and stop our recording. And then if